Hello. Did you know that your case could be dead before it even starts? And most tax professionals don't even know why. Welcome to another episode of Let's Talk Taxes Tuesday. I am your host, Nafisa Manira, your tax attorney CEO who rescues businesses and individuals with tax debt and trains the next generation of tax attorneys, CPAs, and enrolled agents to do the same. Welcome. After more than 11 years as a tax attorney, I've come to realize that a lot of tax representation cases are lost. Applications for OIC and earned income credit and other resolution techniques are lost because most tax professionals misstep when it comes to tax compliance. They misstep when it comes to tax compliance. So today, I'm going to pull back the curtain, open up the vault to these tax compliance missteps that a lot of tax professionals are making. And so we're going to dive right in. Today, we're going to look at 5 main missteps that tax professionals are making when trying to resolve their client's tax debt. The first thing we're going to look at is, what is tax compliance? I know it should be self-evident, but what is tax compliance? And at the basic level, all tax compliance means is that your client is following the tax laws and the tax regulations. From a practical standpoint, when we talk about tax compliance, we're looking at number one, has your client accurately report? We're looking at accurate reporting. Have your client accurately reported their income, expenses, payroll taxes? Have they accurately reported that? Number two, we're looking at timely filing. Has your client timely filed their income tax returns, their payroll tax returns? Right? Then, number three, we're looking at payment. Has your client paid their tax payments? Have they made their tax payments? And of course, we know they haven't made all their tax payments. This is really the main reason that they've come into your office, because what? They have tax debt. However, when we speak about being compliant with tax payments, what we're talking about is compliant with their estimated payments. For example, if they're self-employed, right? If they own a business, we're talking about compliant with their payroll tax payments, their payroll tax deposits, right? So those are the three things that we're talking about from a practical standpoint when we speak of tax compliance. Number two, we're going to look at today is another misstep that a lot of tax professionals make is when it comes to unfiled returns. You have to make sure that your client is current on filing their tax returns. And let's just say you get a client that, for whatever reason, they have not filed tax returns in years. And now they're coming to you because they want to get back on track. Maybe they want to get back on track because now they maybe they recently got married and they want to get their financial situation in order for this new marriage, to be able to buy a house, to be able to maybe get some business loans. It could be several reasons why your client, who has not filed for whatever reasons for many, many years, now wants to get back on track. And so the question that you have, or a lot of tax professionals have, is okay, so how far should I go back? Should I go back 10 years? Should I go back 20 years when I'm trying to make sure that his tax returns get filed? Well, the IRS has answered that question for us, and that's going to be 6 years. Okay. You should only go back 6 years in terms of filing your client's tax returns. And that's going to be the general rule. Now, this is in an administrative guidance. This is not law. This is an administrative guidance which was issued by the IRS policy, a policy statement 5-133 for all those who want to keep abreast on what that is, right? And then also you can find guidance for this in the Internal Revenue Manual, the IRM. You can find guidance, further guidance for this. But remember, it is not law, it is an administrative guidance. Okay, so there are exceptions, particularly if you have a client that has a history of noncompliance, the IRS may require you go back further than 6 years. If you have a client that is a high income earner client, because I get a lot of these high income clients, right? I still, when they come in my office, I still only file maybe their last 6 years. However, I wait for the IRS to tell me if they want additional returns that go further back than 6 years. But 6 years is going to be the general rule that you start with as a as a tax attorney or CPA in this area of tax representation. When it comes to unfiled returns, just go back 6 years. Now, when I do my POA, I always go back 10 years. But in actually filing a return, we're only going to go back 6 years on that. Okay. The third thing we want to look at is the estimated payments. Now, I spoke a little bit about this in a previous episode when we were talking about compliance issues around offer and compromise. But again, this goes for this particular area as well, just as a general rule for any client that comes into your office with tax debt and wants you to represent them in terms of resolving that. You want to look at their estimated payments. Okay. So what I do is when I have a self-employed client come to me, for example, and I see or I know, hey, I ask them the question, are you making estimated payments? Sometimes they say yes, sometimes they say no. If they say no, I want to immediately tell them, hey, this is what you need to do. You need to set up a separate account and you're going to use this account only for tax payments. And then I want to take a look at their profit and loss statement, look at their profit and loss statement and determine, okay, if I'm going to take any, if I'm going to recommend to them to take anywhere from 10 to 20% of their gross pay and go ahead and put that aside in this separate account so that is it available to make those estimated payments when the quarter comes along. Because keep in mind, these tax, you're representing your client, this usually is over several months, right? So you want to make sure that your client is going to be current on their estimated payments. And you will also want to be able to prove this if you are going to be meeting with an IRS collection officer, revenue officer, and you're trying to be able to negotiate the best position for your client. You want to be able to show, hey, yeah, they already have this amount set aside for estimated payments because you're trying to show they're not going to be a repeat offender and not paying their tax debt, a repeat offender and not filing. So this is one of the ways that you can kind of prove that. And I like to use this particular technique for that as well. But keep in mind, you want to make sure that your client has something set up for them to be able to make them quarterly estimated payments, particularly if they're self-employed. Okay. Now, the fourth thing that we want to look at, particularly for businesses, is that they are current on their payroll deposits. Now, if a client has come to see you, their business client, for example, they got payroll tax issues. Yes, they may be behind on their payroll tax payments from last year or the beginning of the year, the few quarters at the beginning of the year. But when we're talking about the current quarter or depending on the timing, the quarter before, you want to make sure that your client is not only filed their payroll tax returns, right? They're also made their tax return, payroll tax return deposits, whether that's on a monthly basis, a semi-weekly basis, or weekly basis, that they are making a payroll tax deposit. They are current on that. Even if they were behind before, they're current on it now. Because again, what you're trying to establish with your client and get them the best, position them in the best manner possible, is that you are trying to position them so that you can say, hey, That was past behavior. That was due to past circumstances. The client is now back in the rhythm of filing correctly, on paying on time, and you want to be able to show that. Okay. So you want to make sure your client is um, compliant in their payroll tax deposits. Now, the fifth area misstep that we want to look at in terms of tax compliance, and a lot of people don't necessarily think about this, but it's what's called a silent compliance fail, right? But what you want to look at is, particularly if you have self-employed clients, right? Again, we're talking about accurate reporting of your client's income, expenses, and payroll taxes if it's applicable, right? What you want to look at is, and you want to ask them about this, and then you want to look at proofs, particularly when you look at their profit and loss statements. If they have independent contractors that they have hired, and other vendors that they have hired, and they have made those payments, and now they are expecting on their tax return, or they actually took on their tax return those payouts as expenses, you want to make sure that your client has issued those 1099s. Now, I know this is an area a lot of people don't think about when they think about compliance, but making sure that your client has filed 1099s for all those vendors or independent contractors that they have paid over a certain amount. Okay, you want to make sure that they filed those 1099s. And if they haven't, they need to file those so that they can become compliant. So those are the 5 tax compliance missteps that a lot of tax pros make that are avoidable, right? Number one, making sure that you understand what is meant by tax compliance. Number two, making sure that your client has filed the appropriate returns. And if they haven't filed in a while, you want to go back at least 6 years and file at least 6 years of tax returns. Number three, you want to make sure that they're current on their estimated payments and that they are putting aside money for the upcoming estimated payments that may become due during the time that you are actually working with your client. And four, if you're working with a business client who's behind on their payroll taxes, you want to make sure that they're current on their current payroll tax deposits and payroll tax filings, right? And then fifth, again, you want to make sure that you look at if they have been paying independent contractors, that they have in fact filed those 1099s that they are required to file. So those are the things that you want to look at, and make sure that you are doing a compliance check and you doing a compliance checklist. Everyone, as part of their quality control process, should have a compliance checklist that you go through or that your staff goes through for every single client to make sure that they are still current. And also, if because a lot of these cases we're working with these clients over several months, not only check it at the beginning, but depending on how long it goes out, you want to check it in the middle and then at the end or right before you get ready to submit your particular tax resolution, um, paperwork. Okay. And then if it's an OIC, which can take anywhere from 6 months to a year, depending on what's going on, you want to only have those monthly check-ins with your client to make sure that they are still remaining compliant on those things that they're supposed to remain compliant in. Okay, because you don't want to go through all this work and then have it fall through the wayside because your client is not tax compliant. So I hope this was helpful, and I want to make sure, hey, like my channel, subscribe so that you can get notified every single time I drop a new video, and you can make sure that you informed and kept up to date on what is the latest that's going on in tax representation, so that you can represent your client in the best, most appropriate way and the most professional way, and that you have the latest techniques, right, to not only be able to run your practice more efficiently, but also represent your client in the most efficient way so that you save time and money. Thanks again for joining me. And then make sure you contact me if you have any questions, any suggestions. You can go ahead and put that information in the comments. You can also contact me at taxroadmapusa.com. I am Nafisa Manira, your tax attorney CEO, and I'll see you next time. Have a fantastic week. Bye.